So, hello, hello, hello. Welcome to the Grow CFO Quarterly Tech Showcase. We're talking ERP fast close. Subtitle: What do you do when you're feeling pain in Xero and QuickBooks and you need to move on? And we're going to look at lots of interesting options and solutions this afternoon. I'm Kevin Appleby. I'm head of tech partnering at Grow CFO, and I've got a fantastic range of speakers that I want to welcome you to this afternoon. We've got Ashley Broom from Sage, Taylor Andrew from Accounts IQ, both in the space of here's what you might think about implementing if you've got to the point you've got to get rid of Xero. But then I've got Rohit from Zap, Nathan from Numeric, and David from Mayday, who are all going to come along and say, well, great, you've seen these big things that are going to cause you a huge financial transformation. Any chance we can get a little bit more life out of the old dog and keep the systems we've got and get the infrastructure around them right? So I think it's going to be a really interesting afternoon. And I'm going to hand over to Ashley for a couple of minutes to just introduce herself and introduce Sage.
Can't hear Ashley,
Ashley,
can you?
can't hear you. You're on mute. No, uh, no, 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 no. Right.
Hello. What about now? Is that
Got
better?
you. Got you now.
We're off to a great start here, right?
No pressure.
Thanks.
No pressure, Ashley.
Right. Thanks, Kevin. Like Kevin said, my name is Ashley Broom. I'm representing Sage Intact. So Sage Intact is a cloud-based financial management and accounting platform designed to deliver that real-time visibility, automation, and scalability for growing businesses. So we'll talk a lot about Sage Intact as that multi-entity hub for your business, how we're driving real-time insights into your business, and ways we're leveraging AI into your platform. So I'm a CPA, background in public accounting. I'm actually a former user of the system, and I was so excited about the product that I came onto the Sage team as a solution consultant. So I'm really excited to get into it with you guys.
Brilliant. Looking forward to it. Taylor, you're representing the other major accounting platform you might choose.
Absolutely. So my name's Taylor. I'm one of the senior account executives here at Accounts IQ. I've been with the business for just coming up for 3 years now. I'm working in the sales department, so I deal with actually speaking to clients face to face, discovery calls, demos of our system, proposals, and obviously contract signing if we get that far with clients as well. In terms of Accounts IQ, we're a fully cloud financial management system. We typically take clients that are coming off of entry-level softwares like Xero, QuickBooks, or Sage 50, or potentially older legacy platforms like your Sun and Exchequers. Similar to kind of Sage Intact, to you in terms of the market that we're targeting, and typically trying to provide more automation on the day-to-day finance function, but also greater visibility and control over reports and analysis inside the system as well.
Brilliant. Brilliant. Who's next? Rohit.
Thanks, Kevin. Hi, all. Thank you for your time. My name is Rohit. I'm head of revenue at Zap. Zap is a data warehouse automation tool, which means we connect to your ERP or finance systems or your business systems, transform that data, then you can use it for reporting purposes, be it on Excel, be it on Power BI, or be it on our BI tool, Zap BI. And our future state is, can I talk to my data? So that's what I'm going to talk about in my session. Thank you.
Brilliant. So, Nathan, what's Numeric all about?
Yeah, thanks, Kevin. And first and foremost, great to be on the session today. Great to be running it with some familiar faces and some new faces. Yeah, great to meet you all today. My name's Nathan. I head up the EMEA sales and go-to-market team over here at Numeric. So we set up over here in the UK about 6 months ago, following on from the success over in the US. We've been around for 5 years. Recently just received our Series B funding with a range of new tools that we're also bringing through. And I think fundamentally, Numeric is really built around kind of trying to solve the key underlying financial data problem that most teams run into, especially when they're scaling, when we've got more complex revenue needs, more complex expensing needs, when ledger posting is getting more and more extensive and reporting is just kind of spiraling out of control. How can we take a very data-first approach to solving that product and start to use AI in a very reliable, consistent, and auditable way to really ensure that as businesses continue to scale, they can really kind of empower the accounting team and the close process to scale with it.
Brilliant. Last but not least, David.
Thanks, Kevin. Hi, everyone. My name's David Tuck. I'm the co-founder and CEO at Mayday. So at Mayday, our mission is to mend month end. I'm an accountant by background myself, so qualified in practice, then headed up a succession of startup and SME finance teams as CFO. And so we really set out to solve with Mayday all of the month end pain points that I experience. So whether that be multi-entity, intercompany, balance sheet recs, recharges, deferred revenue, prepayments, accruals, all of that work that has historically been manually identifying transactions in the general ledger, then calculating the adjustments in spreadsheets, then posting the manual journals back into the accounting system. All of that adds up to that 7.5 days on average of work. A month end, we are eviscerating that with our automation and AI, which I'm really excited to have a chance to show you in a little while. I guess I'm somewhat of the outlier here because, in terms of sort of Xero and QuickBooks Online, our sort of thesis is that, well, actually, you can do a hell of a lot with those systems as general ledgers plus a best-in-class tech stack, including Mayday around it. And so we've got about 650 customers. We ran the stats recently. 46 of those have over $100 million in annual turnover, another 62 with $50 to $100 million of turnover. And we run our CFO tech stack community to sort of spread the word of what it's possible to do with a tech stack around Xero and Mayday. So yeah, excited to dive more into that and be part of the session.
Brilliant. Thank you, everybody. I am really looking forward to this. Gosh. And I asked you all to do 2-minute elevator pitches, and it's only 6 minutes past the hour. So well done, everybody. We're ahead on the clock already. So I'm going to share screen in just a second. But now I thought it'd be interesting just to launch a poll and say, well, actually, what systems are the folk in the room already using? And just get a feel for who we're talking to. So tell us what your current accounting system is. And while that's just going, I will click share screen and flip us back into PowerPoint. Okay. So I'll give folk just a moment or two to finish that. And just what are we covering today? Okay. Well, first 10 minutes, introductions. Then what's the problem? Okay. This area has been our Q4 tech theme in Grow CFO. So a couple of months ago, we issued the Q4 Grow CFO Tech Innovation Report, which is a white paper, and it talks all about what to do as you're growing out of Xero and QuickBooks or indeed other solutions. How do you go about upgrading and getting out of those problems that are giving you a pain every month end? And indeed, how do you achieve that elusive fast close? Okay, so I'm just going to run through the key things in the innovation report for the next 10 minutes. And then we're going to go into, from each of the people that have introduced themselves, we're going to have 20 minutes each to say, well, what's your solution all about? Because that's the whole purpose of today. In the innovation report, we've laid out the problem, we've laid out all the potential solutions, we've put quite a few more tech solutions in than the ones we've got in the room today. But this is your chance now to have a look at some of those and say, is this right for you? Is this something that you should be thinking about? Okay. Having looked at the 5 solutions and having heard about the innovation report, it'll give us a very good picture of what we can do now. Okay, what's the art of the possible today? But we're going to spend 10 minutes at the end with a round table, bringing everybody back into the room and say, well, okay, this time next year or into 2027, what's going to have happened? What are you hearing about in the pipeline? What's happening in your particular company? Now, what sort of tech are we going to be looking like in 12 to 18 months' time? Okay, so thank you, folks. I'm going to end that poll and I'll share the results and see what we've got. Okay, so we've got 40% using Xero. We've got 28% using QuickBooks, 8% of Microsoft Dynamics, nobody using Accounts IQ, nobody using Sage Intacct, nobody using SAP, but we have got a few other ERP system users here. Okay, interesting information. So we are primarily talking to 70% of the audience is sort of entry level QuickBooks, Sage 50 and so on, or Xero systems. Okay, so let me just get rid of that off my screen. Okay, so the Tech Innovation Report, Beyond Xero and QuickBooks, Scaling Your Finance Systems for Growth and Faster Close. So the full report is available at tech.growcfo.net. That is the same site that you used to sign up to join the session today. Okay, so if you go across there, you can download the white paper. And what's in the white paper? It's a biggish document. There's 40 odd pages of it. So we're going through what's the problem? How can technology help? There's a good section on the need for speed. Okay? A section on actionable insights and recommendations for CFOs, because as we'll see, this subject area isn't all about tech. It's about process and about people as much as anything. We've had a look at all the key vendors, not just the people that are around in the room today and their platforms. And there's a section at the end to help you work out what the right solution is for you. Because please don't ask me the question that says, I'm using Xero at the moment, I'm feeling lots of pains. What's the right solution, Kevin? Because what I'll say to that straight away is, it depends. Okay? The same right solution is not the right solution for everybody. Okay? It depends on your needs, it depends on your requirements, it depends on your business. Okay? So we're not coming into the tech showcase today wanting to recommend any one solution. We're coming in today to give you an idea of the range of the things that are out there and an idea to look at one or two of them without ending up talking necessarily to a salesman, right? So the growing pains, why companies outgrow QuickBooks and Xero. So you can read a lot more about this in the report itself, but there are 5 main themes. And I think David covered a few of these right at the end, but limited scalability and multi-entity challenges. Now, once you've got 3 or 4 companies in these simple solutions, doing the consolidation becomes a pain. Now, you will end up, because of the size of the organization and various complications in there, perhaps having a load of manual workarounds in place. You've got spreadsheets to do lots of things that possibly should be done in the core accounting system. And because they're in manual workarounds, you can't automate them. You can't speed month end up. Each of these solutions are limited in their reporting and their visibility. They might be great accounting tools, but they're possibly not great reporting tools. And the volume of transactions, performance, process complexity are going to be things that start getting in the way. And likewise, compliance, if you're regulated in some way, if you've got some specific audit needs, these products aren't real. They're geared up for small businesses doing the bookkeeping. They're not necessarily geared up for compliance control and to help the auditor. So those are some of the reasons. Fast close. Well, fast close is a really interesting one for me. And if I actually turn my own personal clock back 25 years, I was working in a business area in PwC Consulting where we specialized in talking to clients about better planning and budgeting and better close. We had a fast close practice. We always cited Cisco Systems as the gold standard, the business that actually already did the virtual close. And back then, 25 years ago, we were helping clients implement systems that could theoretically get them to fast close. Clock forward 25 years. Have I seen many more businesses move to the place that Cisco Systems were back then? No, I haven't. And why is that? Well, it's because to some extent, it's not all about tech. The tech is getting better and therefore should make it easier. But it is as much about getting your processes right and your people doing the right things at the right time. So please, please don't think that just because you implement a whizzy solution based on some of the things we see this afternoon, it's magically going to give you fast close. No, it isn't. There's a lot more to it than that. No, over-reliance on manual processes. You have to fix your processes. If you put those same manual processes into a new system, you'll have the same problems. Big problem is disconnected systems and data silos. Okay. And that's one of the problems that you'll find around a big tech stack. You've got bits of data that you need in for month end in lots of different places. And that's also going to be a limiting factor as you extend what you want to do with AI and automation. If you can't get all the data into one place, you can easily use it. You won't be able to leverage that fully. Reconciliation and journal entry cause a lot of pain around fast close. So if you can do things that allow you to reconcile faster and journal enter better, and I think you can see some of the tech solutions really do help you in that area. But other reasons, lack of standardized close schedule and responsibilities, very much in the people area. You've got to get the people piece of this right so that they're doing the same regular things on the same days in the same way every month. Of course, last minute surprises and adjustments. Something that you've really got to think through. Again, it's a people and a process issue rather than a tech issue. So the things that are going to get us to fast close aren't just what you're going to see today, but the good, easy to use tech is really going to help us. Okay. So why do you need to close faster? Well, the key one, you want to make decisions faster. You want timely insights for decision making. You want better internal control, and better internal control comes from knowing about stuff earlier, knowing the facts, knowing the odd things that are going wrong earlier so you can take corrective action. Actually, speed equals cost. Cisco Systems 25 years ago didn't do the fast close because they wanted a better process. They did that virtual close because they recognized that it was going to cost them less. Okay, lower cost will certainly come in if you close faster. Faster you get results out, the more confidence you get in your stakeholders. If you tell a stakeholder on working day 10, oh, well, we're still playing with the accounting numbers, we're not quite there yet, versus working day 2, here's the profit, here's the sales. Now, you're going to have a lot more confidence in the business and say you can get stuff out on work day 2 and it's right. And let's face it, our life in finance is very imbalanced. You know? All the work gets done in the first few days of the month. It can become hectic. It can become horrendous, long hours and so on. If we can get fast close sorted, it should give us a far better work-life balance for ourselves. Time to do other stuff. So, a couple of things you can do here. You can maximize your current setup. You can leverage add-ons. You can improve your processes and data management around the system. You can improve integration, but you've got to recognize system limits. Okay. And you can do a lot with zero. And I think you'll be amazed when the guys later on this afternoon show you the things you can do to make Xero, QuickBooks, etc. last a lot longer. But there are limits. So you can only maximize so far. Okay. And extend the life of Xero and QuickBooks. Well, we're talking today, Zap BI, putting a data and analytics layer on, numeric, orchestrating that close, Mayday, big play in accounting automation. Pros, cost. You're not going to the next generation of ERP, which is going to be more expensive each month. You are avoiding the big financial transformation project. But the cons, you get a big tech stack to manage. Lots of interfaces, lots and lots of single points of failure. And your data is all over the place still. Okay, Zap BI might help you with that. But we want data in one place if we're going to successfully go and implement AI. Or replace with a mid-market ERP. And there are 5 solutions that are in this space. There are more. Sage Intacct Accounts IQ we're going to hear from this afternoon. There's also right at the top end, there's NetSuite. If you want to go even bigger than this and go into huge company places, you've got SAP, Microsoft Dynamics is there as well, and Aquila, who we've worked a lot with in the past in Grow CFO, are all viable solutions in this area. So look around and look at them all, because they've all got pros, they've all got cons. Which one works best for you? But area that we haven't gone into in today's showcase, there are some very interesting emerging ERP solutions that are building on an AI native platform. Okay, there's the ones that I've managed to find so far, researched 8 of them. The one I hear most about in here is Rillet, but don't take it that that's necessarily the best of these. I literally know nothing about them other than they're emerging. Possibly a case for another tech showcase in Grow CFO. We might take a look at some of these solutions in a future quarter. But be aware there are these AI native solutions coming through, which could or could not be game changers. The thing that worries me here is it's a list of 8, okay, which suggests to me that some are going to be winners and some aren't, because I'd expect that list to consolidate over time into a smaller number of players. Okay, so that sets the scene. We can see why we might want to change our ERP system, or why we might want to plug some things in around it to make it last longer. So I'm going to introduce Ashley at this point to come back and take us into the first of those solutions that we might use if we want to replace our ERP, or replace our basic accounting system, and move into a much better mid-market solution. So Ashley, over to you.
Yeah, thanks, Kevin. So like I said earlier, I'm a solutions consultant at Sage Intacct. So today we're going to talk a lot about how Sage Intacct is helping those finance teams close faster, gain deeper insights, and drive smarter decisions. So I'm going to go ahead and hop into the environment today, and we'll get right into it. Okay, so the theme of today's discussion is going to be how Sage Intacct gives you guys that better visibility in a more efficient way for more accurate decision making. So we're going to look at this from 3 points of view, right? We're going to talk about Sage Intacct as that multi-entity hub, right? Driving that reporting, driving that visibility into your business, right? We're going to look at this from an efficiency standpoint. So how are we automating those intercompany transactions, right? And how are we making you guys more efficient when it comes to reporting across all of your entities? The last thing we'll look at is how we're leveraging AI inside the platform to automate the close and push those insights right in front of you guys. So let's take a look, right? Here I'm on my controller dashboard. So this is like my morning newspaper. This is the first thing I look at when I log into Sage Intacct every morning, right? And these dashboards are going to be highly configurable to the role and to the user. So maybe I care more about cost of goods sold than cash on hand. You'll see me click and drag that component, right? Maybe I don't care at all about intercompany revenue. I can get rid of that, or I can add a component from here, right? But different members of your team are going to care about different metrics. So my controller's dashboard is going to look different than my CFO's dashboard. My AP manager's dashboard is going to look different. And I might have different dashboards for different functions, right? Now, Sage Intacct is going to leverage what we call a modern chart of accounts. So what I mean by that is we're going to see these really clean account numbers inside Sage Intacct. We're not going to see dots and dashes inside our account numbers. And that's because as we're transacting, we're leveraging what we call a dimensional general ledger. So we're leveraging these dimensions as data tags so that as I push in a journal entry, as I create a transaction in the system, I'm tagging these transactions to the department, maybe to the class, right? The revenue stream, the item. And that's going to enable me to interrogate my data from these dashboards and slice and dice my data later on. So for example, on this filter, maybe I want to see these reports and metrics inside my dashboard, but only as they relate to my admin department. I'm just going to apply that filter, and now we're only going to see metrics related to that specific department, right? So I'm looking at these metrics across all my entities, and I'm able to drill into that specific department. Even inside that department, right? If I wanted to pop into a specific project, right, I could take that a step further. And I can adjust these filters on my dashboard to filter by different dimensions if I want, right? So again, that better visibility in a more efficient way for more accurate decision making, right? On a system like QuickBooks or Xero, what you guys might be experiencing is exporting this data to Excel, trying to piece it together to get it how we want it, and then applying filters to pull the insights we need. And oftentimes, by the time we do all that, that data is stale. I've got to do it again. Okay. So I want to highlight this message thread over here on the left-hand side of my screen. This is our Sage Intacct Collaborate tool. So we're going to allow you guys to communicate about what's happening inside Sage Intacct, actually inside Sage Intacct. Okay, and a couple things happening here, right? When I say that better visibility in a more efficient way, I mean that we want to prompt you guys from these dashboards to ask the right questions about your business and then give you the utility to drill down and find the answers. So for example, Emma Penny, that's our controller here. She's messaging her staff accountant, Tom, saying, hey, explain this cost of goods sold variance from budget. And she sees that, right, because of this metric here. And she sees that because of this cost of goods sold metric built into her dashboard. So if I'm Tom, if I'm her staff accountant, I'm going to drill straight into that cost of goods sold metric. Okay, I'm going to drill into my actual. And looking at a subledger, I'm just going to keep drilling into that AP bill itself, right? Now, I can actually go from that high level, that KPI level, down to the transaction level, just a couple clicks here. Okay, I've even got my attachment, my invoice attachment built in. And inside Sage Intacct, we won't look at this today, but we're actually going to give you the ability to use AI to just drop these invoices in the system and have them automatically map, right? Now, if we look at the bottom, this is what I mean by that dimensional general ledger. We see that really clean account number. I've tagged this bill to the department, the project, the vendor, the class, right? I can also drop into an audit trail for this transaction. Now, Sage Intacct is the preferred provider of accounting solutions by the AI CPA, right? And a big reason why we're the first and only solution to have that AI CPA endorsement is because of this audit trail that you see built into the system, including that strong system of internal controls, and because of this user-friendly platform. All right. So we've talked about navigating in the system, using those dimensions, drilling down. Now I want to talk about Sage Intacct as that multi-entity hub for your business. Okay, we're going to think of Sage Intacct as that multi-entity hub in 3 ways. The first way is going to be navigating across all of our entities. The second way is transacting across our entities. And the third way is consolidating. So getting those really clean income statements and balance sheets. So now I'm operating at the top level here. Okay, you guys just saw me drop into entity 100. Notice I didn't log out, log back into anything. I just dropped into that entity. This tab opened up, and now I'm only reporting and transacting inside entity 100. Okay, and I can set controls in this way too. So maybe someone needs access to all my entities. Maybe someone only needs access to one entity, right? I can set up my controls in that way. Now, we're also going to automate these intercompany transactions across our entities. So let me show you what I mean. You'll see me use this bookmarks menu to drop into an intercompany transaction that I've configured here, right? And inside this entry, okay, it looks like I'm transacting across 7 different entities here, right? So it looks like entity 300 is providing some services to these other entities. And as a CPA, I see this and I start to get heartburn. I'm like, oh my gosh, this is going to be a nightmare to reconcile. I'm going to have to go in and record these due to froms. But what Sage Intacct has done for me is it's come behind me and automatically recorded this entry to keep me in balance. Okay, so I recorded this entry in pink up here at the top of my screen. Sage Intacct came in behind me and recorded that entry in green. All right. Now, what this probably looks like in QuickBooks, right, is I'm recording entity 300 side of this entry. So I'm recording that revenue side, and then I'm booking that receivable, right, that due from. But then I'm trying to log into entity 100, do the same, log into entity 200, do the same, right? In Sage Intacct, we're taking that away. So we're doing 2 things. We're saving you time by automating, and then we're making sure we stay in balance to give you guys confidence in your numbers. Okay. So I said the first way we would think about intercompany is navigating across these entities, right? We talked about that. The second way is automating these intercompany transactions. Okay, we looked at that as well. And then the last way is consolidating. So we don't have a ton of time to get into it today, but what I'll say is Sage Intacct is going to automate those consolidations across our entities to make sure that revenue isn't inflated, right? When I pull that that multi-entity income statement, and to make sure that when I pull my balance sheets, they're really clean. I don't have those two do-froms hanging out on my consolidated balance sheet, right? Now, we've covered dashboards, reporting, we've covered dashboards, multi-entity visibility. I want to talk briefly about report creation, and then we'll finish on using AI in that month-end close process. So you'll see me click and just drill into this profit and loss, and I just want to tailor this a little bit, right? Now, you guys don't have to remember the how here. We have a really strong implementation process at Sage Intacct. Just have to remember the why. Okay, so we have a library of over 130 pre-built reports. So odds are if you're looking for something specific, it's going to be there. But let's tailor this report together just to demonstrate the utility of this financial report writer. Okay, and this tool is designed for users not to need a background in IT, not to need a background in data analysis to be able to leverage it, right? This tool is built for accountants by accountants. The Sage Intacct administrator isn't a thing, right? Now, inside this revenue field, I'm just changing the dimensional pivot of these rows. So I just want to break out my revenue by class. So for me, I just want to understand what type of business is driving that revenue. And I'm going to break out my cost of goods sold by department to understand how my departments are impacting my margin. And lastly, I'm going to change that dimensional pivot, right? Because that's all I'm doing here, of my operating expenses by vendor. So I want to understand where my cash is actually going. Okay. The last thing I'm going to do here is inside this column tab, this just looks like a spreadsheet, right? I got my account name, my actual, simple enough. But inside this actual tab, I want to expand that dimensional pivot across my entities. So I actually want to see what entities are driving my profitability here. So let's take a look at what we just created. Okay, and now you can schedule these reports to push to your email. You can embed them into your dashboard, but I'll always encourage you guys, right? Embed these reports into your dashboards. Use this data because these are updating real time as you transact. So right now, okay, we've gone from creating reports entity by entity in QuickBooks, okay, exporting them to Excel, piecing them together to get the insights we want. By the time we do all that, right, that data might be stale. We have to do it again. To when you log in every morning, I've got this combined financial statement across all of my entities broken out in the way I want. So now I understand, okay, mid-sized business is really driving revenue for entity number 2. Why? Okay, I spent a lot of money on marketing at entity number 2. What's going on here? And I've paid my CPA 75 grand this year. Now that might be a good thing, but is there any of that we can take in house with a better system here? All right. So that's reporting. Again, we're thinking about Sage Intacct for that better visibility in a more efficient way for more accurate decision making. And with my last couple minutes here, I want to show you guys how we're leveraging AI to eradicate the close. Now we want to use AI as almost like a backstop for your transactions, because when we're pulling these reports, right, and we're leveraging to make business decisions, we want to know that the data is relevant, timely, and accurate. And this is how we're doing this, by eradicating that close. So here in my close progress monitor, right, I've got my tasks categorized and I can see how far along I am. In my AP, my AR, I can see which tasks are overdue, right? Maybe I want to pop in, adjust some of those. And I've got my tasks divided into buckets. So I can see, okay, how much have I recorded for this period? How much have I reconciled? How much have I reviewed and then reported? So I'm monitoring that close in real time. But we're going to take this a step forward, and I'm going to run my close assistant here from the screen. Okay, now this close assistant tool is taking the guesswork out of that month-end close process. So I don't have to track this close process in an external spreadsheet, right? I can create it inside Sage Intacct, and this close assistant is going to prompt me to run these tasks. So I'm just going to go ahead and run my variance analysis from the screen. Okay. Now we talked about Sage Intacct prompting you to ask the right questions about your business, and then facilitating you drilling down to find those answers, right? We're taking that a step further right here. So it's provided me a variance analysis. It looks like my operating expenses are a little over budget. So I'm just going to ask Intact to describe the variance. Okay, this generative AI tool built into the system, it's going to give me an explanation here, right? So this is highlighted that I'm over budget. Not only has that highlighted that I'm over budget, it's explaining why. Saying, hey, that salary and wages expense is coming in a little over right here. Okay, so what I'm going to do is just pull that full financial report. And now I see it, right? I see that those payroll and related expenses broken down. That's what's driving that budget overrun. And of course, I could drill down if I want to. But we've talked about a few things today, right? The key concept is that better visibility in a more efficient way for more accurate decision making. Okay, we've talked about how Sage Intacct has a user-friendly interface. It's going to be that multi-entity hub for your business. We've talked about the flexibility in reporting to give you guys the insights you need. And we've talked about Sage Intacct using artificial intelligence to eradicate the close here. Okay. Now, we're really excited about this functionality that we built inside the system. I would love to maybe take any questions that the group has at this time. So I see.
Thank you very much. Questions? Yes, questions for Ashley. I know I've had a couple of questions coming from Margaret. Margaret, you were asking where to find the innovation report. I've dropped a link actually into that question for you. You'll see it at tech.growcfo.net. It's one of the menu items, but I've given the full link as a direct reply to that question. Any other questions coming in from Ashley? Certainly, I've got one, Ashley. Now, virtual close. I was talking about Cisco systems and that being the exception. Are you seeing very, very fast close with users of Sage Intacct?
Yes, yes. We like to think of Sage Intacct either eradicating that close or providing that real-time close for our users. One, because we're prompting our users to do those month-end close tasks, and we're automating a lot of those tasks inside the system. So instead of that month-end crunch, right, users are automating, pushing in accounts payable bills, saving them literal weeks, hours off of pushing those accounts payable bills in, especially with those consolidations. I was talking to a business yesterday, and the CFO said, man, if we could automate these consolidations in the system like you're showing, that would save me 40 hours a month. So yes, shaving those hours off that month and close. And I am seeing a few questions in this Teams chat that I would love to just answer, Kevin, if you don't mind.
Yeah, sure.
Perfect. So Margaret, I saw a couple coming from you. The first is, does Sage Intacct allow reporting for multiple stat accounts? Yes, absolutely. So I even have an operational reporting deck built in because I get this question a lot. So we're going to allow you to push in these operational metrics like number of labor hours, maybe number of units sold, maybe monthly deals closed per rep. Oftentimes we see square footage, right? Miles driven. And we can leverage those statistical accounts to compare against our financials. And I see German, UK, Australia, we do support multi-currency, of course, in Sage Intacct, and we'll automate those translation adjustments. As far as the level of detail for our budgets, we can get really granular. So we can assign those budgets to dimensions, we can assign them to accounts inside, we can split them out month over month, so we can get pretty granular. We do offer, which we didn't see today, a full cloud-based budgeting tool to get you guys out of those spreadsheets, create your budgets and forecasts inside Sage Intacct, and it has a bidirectional sync to Sage Intacct to report on those and then sync your actuals back into that planning tool to model. Now, is this dashboard an additional feature to pay on top of the regular annual subscription? No, those dashboards, those reporting tools that we saw today, even the intercompany transactions, that all comes with the core package, right? Because Sage is really built on that better visibility and that being that multi-entity hub for your business. Now, I think I saw one more come in. Do you support crypto accounting? I would love to get a little bit more information on what you need. I will say I have sold to cryptocurrency brokers before. As far as actually managing that crypto in Sage Intacct, I would have to dig a little bit deeper into what you guys actually mean, but we've certainly dealt with businesses in the crypto space before.
Yeah. So Ashley, I'm just quickly running the two polls that you asked us to include.
Thank you.
I might have run them in the wrong order, actually. The first one, we're saying, what's your biggest financial management challenge right now? Oh, is it manual consolidations and reporting delays? Is it lack of real-time visibility? Is it data accuracy? Is it scaling systems? What is it that's causing you the issues right now? Okay. Give folks just 2 more minutes to answer that. Okay. So I'm going to close that poll in 5, 4, 3, 2, 1. And I think that's interesting just to share, actually, that data accuracy and audit readiness doesn't seem to be an issue for anybody, but now it's pretty equally spread across the other three options. So we've got three real pain points in there: scaling, real-time visibility, and manual consolidations, all coming in equally. Okay, and I'll quickly run the second poll. Okay. How would you describe your current month-end close process? Fully automated and completed within a few days, partially automated, mostly manual and spreadsheet driven, or unsure, it varies by department or company or however you're organized. Okay, yeah. And that I'm seeing something that's, yeah, I'd expect that. Okay. I'm 5, 4, 3, 2, 1. Just closing that poll. Interesting again to share the results on there. Mostly manual and spreadsheet driven. Half the people attending. Partially automated, but still manual in a lot of areas for the other half. So nobody's fully automated. Yeah, it's probably about what I'd expect, I think, Ashley.
Yeah, definitely.
Yeah, okay. Right. So, any more questions for Ashley? I think we've answered everything that's come through. Brilliant. Ashley, thank you very much. I enjoyed that.
Thanks, you guys.
And I'm going to hand swiftly over to Taylor. Apologies, we're running 2 minutes late, Taylor, but I'm sure that that's not going to be an issue.
No problem at all. Thanks very much, Kevin. Thanks everyone for joining us again today. Just going to quickly share my screen. As I mentioned previously, my name's Taylor. I'm one of the senior account executives here at Accounts IQ. Just wanted to start really quickly with a couple of slides just to give you a bit more of a background on Accounts IQ, and then we'll jump right into a demo environment so we can give you guys the most full value from today's session as well. So Accounts IQ, I mentioned before, we are a fully cloud financial management system. We've been in around the market now since 2008. Okay, and we've grown massively over the years as well. So we've now got just over 35,000 users in over 80 different countries. The vast majority of our clients are based in the UK or Ireland, but as you can see there from the number of countries, the fact that we have multi-currency consolidation is a real big factor for clients to have entities in other parts of the world as well. We are an Irish company ourselves originally, so about half of our workforce is still based in Dublin. You can probably guess by my accent, I'm not based out of our Dublin branch. So we also have a UK headquarters as well. We're just outside of King's Cross Station in London. And we very much target ourselves as a mid-market software, typically for clients that are coming off of systems such as Xero, QuickBooks, and Sage 50. So how we do it, why do clients choose Accounts IQ? Because as you can see on today's calls, there's lots of different options out there, whether that's adding to your tech stack and staying with the likes of a Xero or a QuickBooks, or switching on to other larger systems such as Sage Intacct, NetSuite, or Microsoft Dynamics. So I think a big thing that makes us stand out compared to some competition in the market is that we don't outsource anything whatsoever at Accounts IQ. So you're not having to work through resellers or implementation partners. You're always working directly with the system, whether that's through the onboarding process, support, account management, or integrations. So what that means is we can be really fast and we can be really flexible for growing businesses as well. So if you ever have any system issues and you need to raise a ticket, we have a 27-minute average response time to a ticket being raised. As a real person getting back to you, by the way, not just an AI robot to say that we've got the ticket. We get fantastic feedback from current clients that are already using the software. So we average 98% in terms of customer satisfaction. And I think a lot of that comes down to the speed and the ease of implementation of Accounts IQ as well. So a lot of times people don't want to switch on to a larger system because they think it's going to be 4 months, 6 months, 12 months of their life. Finance never stops. At the end of the day, the normal job doesn't stop just because you switched on to a new finance system. So I think the fact that we can get you live real time between 4 to 6 weeks is a real big attraction for people switching on to a system like Accounts IQ. So what we're going to do now, let's dive straight into the product demo for the last 15 minutes of the session. Just a quick background, first of all, this is your homepage. This is the first page you're actually going to see once you log into Accounts IQ. So unlike with Xero and QuickBooks, you don't have to have separate licenses and separate logins for each one of your entities. You can have all of your entities on the same platform under the same login. So in this demo data set, we've actually got 4 entities set up at the moment. We have an Irish entity, we have a US entity, and then 2 UK entities. Okay, so we can handle multiple currencies. And as you can see as well, you can have flexible consolidation groups as part of the package too. Okay, so we have a sub-consolidation, which is consolidating just those 2 UK entities. But then we also have an overall consolidation that's consolidating all 4 of those entities in the platform as well. Now, where I just want to start, first of all, is jumping through a kind of single entity view to begin with, showing you some of the day-to-day automation in the finance function that's really going to improve that month-end close within your business. And then we'll finish off with the kind of management accounts, reports, analysis, and consolidation that you can get from the package as well. So the first thing that I've logged into now is my homepage. Okay, so each of your users can have an individual customized homepage based on what they need to see when they first log into the system. Okay, so you can see here I've got some AP and some AR information on my activity tiles. Then I've also got my insight tiles as well that's going to give me information about suppliers and customers, cash in bank, debtors, creditors, approvals, etc. And you can actually use the activity and the insights tiles and just select or unselect to customize that to your specific needs. Okay, what's also quite nice as well is these are all links that allow you to drill down into either individual transactions or individual sections of the system as well. So you can see I've got 5 AP invoices that are waiting to be approved. I can click into that and it's going to drill me down just to those 5 purchase invoices that are waiting for my approval. Okay, we've got a nice clean navigation bar down the left-hand side of the screen. So you've got a list of your different menus with a number of sub-menus that are going to sit beneath those. What's also quite nice, though, is that we have a favorites tab. So a lot of systems you'll see out there let you favorite reports and dashboards that you're going to be using on a regular basis. We also allow you to favorite specific pages in the system that you're using regularly. Okay, so that way, brand new system doesn't suddenly seem so scary because you can favorite the pages that you guys are going to use on a consistent basis and navigate to them really, really quickly from here. Now, just where I want to start is in the general ledger to talk you through how we actually build out your chart of accounts. That's the backbone of any real finance system. So the screen that I'm opening up now is what we call our GL Explorer. Okay, so it's not your main report manager, but it's a nice quick way to get a high-level overview of 3 key financial reports. So I can set this to a P&L, a balance sheet, or a TB from here. You've got a nice clean 3-tier chart of accounts in Accounts IQ. So we give you categories, subcategories, and then your nominal codes that sit beneath those. Okay, a lot of systems out there, you only get 2 tiers, but you end up with long lists of GL codes underneath each of those categories. So it can become really messy and unorganized when it comes to reporting. Now, on this screen, I've got plenty of filters I can apply. So I can select whether I want a period or a year-to-date view. At the moment, I'm looking at actuals of December 25 versus actuals of December 24. Anywhere you see numbers in blue, you've got drill down functionality. So I can actually get down to transaction level from this screen. All of these grid screens that you're going to see embedded throughout our product are drill down interval. Okay, so I can search for specific transactions. I can actually customize the grid based on what I want to search. So if I want to bring currency into this screen, I can do that and search by currency as well. And then I can actually create filters and filter conditions that I can run really, really quickly when I'm doing my month-end close. Now, coming back into here, we've also got multiple budgets you can have in the system as well. So you might want to upload a standard budget at the start of a new financial year. but it's nice to have the option to revise or reforecast that budget, whether it's monthly, quarterly, half yearly, or at the start of new projects. If I just change that to a budget of the same year, you can see how quickly those numbers start to update. So it's nice instant one-click reporting. Now, similar to Sage Intacct, on top of the chart of accounts, we also give you an additional analysis structure called our dimensions that's going to allow you to slice and dice your data in more detail. So similar to the chart of accounts, this is completely customizable. So whatever is important to your business, whether it's projects, departments, cost or profit centers, we can build that out for you during the implementation process. And then that's going to allow you to drill down into your data in more detail. Okay, so whether I'm looking at expenditure reports, profit and loss, trial balances, I can start running them by those dimensions. Okay, so I can have a look at the performance of my different projects, my departments, my locations, or my revenue streams in this example. Just coming back to the general ledger, I think a real pain point around month-end close is lack of journal automation as well. A lot of systems out there, we have accountants that have spreadsheets, they're tracking all of their deferred revenue and their prepayment journals and accruals outside the system, having to come in on a monthly basis and manually post those journals, which obviously really is an efficient way to do things. So first things first, we have a journal importer. So if there's a large amount of journals that you want to bring into the system, there's an Excel template you can download from Accounts IQ, pre-populate, import back in, and that will be all your journals posted for you. You've also then got copy functionality as well. So if you want to use a similar journal to last time, you can copy an old one, update the details, and repost really, really quickly from here. And then you can also automate your prepayments, your deferred revenue, and your accruals from here as well. So if we use accruals as a nice, easy example, if I'm creating a new cost accrual, I'm going to have a dedicated nominal code that's assigned for my cost accruals. I can then choose when I'm creating it, how long I want this accrual to run for and how often I want that to accrue. I can also choose whether I want that to auto reverse at the start of the next period, or if I select manual reversal, I can actually choose a supplier to watch. Okay, so if I chose Adobe Systems in this case, I will then be notified by the system when I receive an invoice in from Adobe. So I can come into my cost accruals manager, quickly check if it needs to be reversed, and do a nice simple one-click reversal from here. Now, again, coming back onto the automation side of things, a lot of pain points I see when I'm speaking to clients that are using more entry-level softwares is either there's a lack of automation around AP, or they're relying on 2 or 3 different systems to actually handle invoice or purchase order processing, and then also to handle the approval side for visibility and control over spend within the business too. So we have inbuilt AP functionality. Okay, you have the ability to raise purchase orders inside our system. You can send them through multi-step, multi-approval workflows, whether that's people that are in the finance department or people that are outside, so heads of departments, project leads, or senior management. When it comes to the invoicing side of things, you have the ability to forward all of your supplier invoices straight into the system. And then we have OCR technology inside Accounts IQ that's going to read that invoice for you and pre-populate the relevant fields. Okay, so it's much more of a quality control for finance as opposed to a manual creation of that invoice. So the system's going to read those multi-line invoices and pre-populate them for you. Once you're happy and you've checked it, you then have the ability to save that down and either match it off to a purchase order or send it through a workflow approval if there's no PO that's related to that invoice. In terms of the payment side of things, we still speak to clients today that are processing hundreds of supplier payments at month end, and they're doing that all manually one by one through the bank or putting together their own BACS files in Excel. So with Accounts IQ, we brought out bulk payment functionality. So this is a great way to be able to get all of your transactions and all of your invoices into one screen to make it really easy to actually pay those suppliers. Okay, so you can filter these screens by supplier name, by reference number, by due date to make sure you get down to the right invoices. You can drill down to invoices and approval details all from this screen. And you also have the ability to send this payment file for approval as well. Okay, we'll even give you payment files that are recognized by your bank so that you can straight away download a bulk payment in the right format, upload that to your bank, and then we can automate those remittances being sent out as proof of payment from the system as well. So just coming back to the reports and dashboard side of things before we jump onto consolidation, we have some fantastic reports and dashboards that span AP, AR, general ledger, bank, fixed assets, etc. But I'll just run through some of the dashboards to show you what's possible in terms of slicing and dicing your data for those month-end reports. So if I jump in here to a profit and loss, Okay, you can see that I've got some key KPIs on here, like my operating income, gross and net profit, and my margins. All of these dashboards are interactive as well. Okay, so I can drill down into these widgets using those KPIs and using my chart of accounts. And then down the left-hand side, you can see that I have the analysis structure, the dimensions built into the dashboard. So if I want to run the entire profit and loss just for a specific project that's happening within the business, that entire dashboard is now filtered down just to that one project. Okay, I could even chuck in a number of my different projects here. Or instead, if I just want to have a nice split on here for my net profit, I can see the amount and the percentage of net profit that's coming from each of those individual projects in the business. Okay, so you can see how fast and intuitive those dashboards are to update. It's great for obviously finance teams, but also for people that are outside the finance department that still need those real-time insights. They can log in, run a report based on their department and get that insight without having to chase finance every 2 minutes for an update on that report. We've also got some fantastic AP and AR dashboards as well. So this is going to give you things like your top 10 suppliers. This is going to give me my aging analysis, whether that's by date, by currency, or a detailed breakdown one by one of each of my individual suppliers. And you've also got purchase commitment dashboards as well. So for those of you that are actually using purchase orders, it can be quite difficult to work out what the actual committed spend is of the business at month-end close, as opposed just to what's been posted. So you get really, really clear visibility from our purchase commitment screen. Now, jumping on to the consolidation side of things, as you can see here, I've got a nice toggle where I can switch in between all of my different entities straight from one platform. But what I really quickly want to show you first of all is the consolidation manager. Okay, this is where your flexible consolidation comes in. So I mentioned already that I have 2 consolidation groups. I've got a sub-consolidation for my UK entities, and then I have an overall consolidation for all 4 of those entities in the platform. You can build as many consolidation groups and accounts IQ as you require, and you can have as many entities in your environment as you like. Okay, we have some clients that have 300-400 plus entities with 5-6 different consolidation groups. You can add new entity to a consolidation group in the click of a button. So I can just select the entity that I'd like to include, set the ownership percentage, set the ownership period, and then include that in all of my consolidated reports. Now, once I log into the consolidation entity, what you're going to notice in terms of insights is you don't have all the same kind of jargon that you have in an individual view, because you're not going to be posting transactions from here. You do have a general ledger though, okay, and you have the ability to do post-consolidation journals. But in terms of those month-end insights, I've got that same GL Explorer screen that I showed you at individual entity level at consolidation view as well. The only difference is though, I can actually drill down and see where those totals are coming from across my different entities in the platform. Okay, and the great thing is I'm not jumping into Excel and collating all my TBs manually. I can do that all from one platform. And I can also drill down into the individual transactions of each of those entities whilst I'm at that consolidated view. We've also got intercompany automation, by the way, so you can create intercompany transactions. The system will automatically create the other side of that intercompany transaction for you, and we will automate those eliminations of those intercompany transactions for your group level reports. And then finally, just to finish off with 1 or 2 dashboards before we jump onto any questions. Again, very, very similar reports that you have at the individual level to the group level, except I now have the ability to split all of my reports and dashboards by entity, as well as that analysis structure as well. Okay, so if you, for example, have projects that are common across multiple entities, again, I can run a project level P&L across all of my entities in the group without having to run that on an individual basis. So anyway, I hope that gave you guys a nice bit of an insight into Accounts IQ and some of the automation that we can bring to really improve that month-end close, but also those reports and analytics that you guys are going to be getting for that month-end reporting. Kevin, I don't know if any questions have come in while I've been talking.
There's quite a few come in. Margaret is very, very busy asking questions. First one, do you have modules for fixed assets, expenses, or payroll?
Yes, absolutely. So fixed asset register is built into the system. We don't charge module by module at Accounts IQ, which is the differentiator between us and an ERP. So things like fixed assets come with the package. We've got a register that can basically automate your depreciation. So fixed asset classes, individual assets, depreciation method, and percentage rates in there as well.
Okay. Payroll?
Yeah, payroll, we have partners for payroll. So we have 3 plug and play integrations with BrightPay, Staffology, and Cascade. But what we always say is we've got an open API and we have an in-house custom integrations team. If there's any payroll software that you guys want to use, don't have to go with one that we recommend. Pick one that's right for your business, and then we can either integrate with that, or it's a nice simple process to bring in those payroll journals. And then expenses, we also have an expenses software called Expensing. It's part of the Accounts IQ group. That is fantastic for both out-of-pocket expenses, corporate credit cards, prepaid cards, virtual cards, OCR scanning, carbon reporting, and then integrated into Accounts IQ to bring across all of those invoices and receipt images as well.
Now, here's a question that I don't understand what it means.
I'll give it a go.
Proof of FCTR provided?
I'll be honest, I'm not too sure what that is either, Kevin. Is it FTCR, did you say?
FCTR.
FCTR. Not one I've heard of. I can double check it for you, but not one I've heard of.
Okay. What sectors are the majority of your clients from?
So we're a real range of different sectors at Accounts IQ because you can customize that chart of accounts and that analysis structure. It's really kind of any sector that we can suit to. But I'd say some of the largest verticals for us are charities and not-for-profits, really big in the financial services sector, tech companies, hospitality companies. So a real kind of wide range of different industries.
Yeah. So it's anything where you don't have any real deep specialist requirements.
Exactly that. Yeah. I think if other kind of industries like your manufacturing systems that typically have MRP systems as well, a lot of the time will need a finance system regardless because they're getting only a small amount of finance from those types of systems because it's not built as a finance software. They'll typically run a finance system and integrate that into their MRP.
I know one that fascinated me a few weeks ago, we did a webinar with you guys looking at the implementation in Triathlon Ireland, which is a profit. And you had that not-for-profit problem of lots and lots of different funding sources and grants and so on.
Restricted, unrestricted funding.
And all those restricted funds. And it looks like the solution was brilliant at doing that sort of thing.
Yes, it's a real pain point.
What BI tools do your clients tend to use? And is API easy to use?
Yeah, absolutely. So we have a public open API that everyone can access. We also have that in-house team as well. So even if someone else is building the integration, whether that's one of your current tech stack that wants to build the integration, or if you guys have developers in how to do that, we can always give you half a day or a day worth of that implementation time to spend with our integrations team as well to run through the API, make sure whoever's developing the integration fully understands that before you start that project. And everything is plugged into Sandbox first of all. Okay, so you rigorously test every integration before you switch that on go live. We live link, by the way, into both Excel and Power BI as standard with Accounts IQ. We also have some partners that specialize in building Power BI dashboards and reports that you can use and plug into Accounts IQ. But typically, because you can combine non-financial and financial data in our system, a lot of people are using Accounts IQ as that BI tool.
Interesting. Okay. Do you have a native module for manufacturing inventory management?
No, what we typically find is finance systems don't do inventory management and manufacturing too well in comparison to systems out there that specialize it, unless you step up to the very large systems like your SAPs that do quite specialize in things like manufacturing and inventory. So we've integrated with lots of different systems like Sin7, which is a big one for inventory and stock control, also manufacturing, Turbo, Stockley. So whatever kind of systems you guys are either using right now, we can integrate with, or we have fantastic partners that specialize in that so you can have the best of both worlds.
Brilliant, brilliant. I think we've already touched on multi-currency, but Margaret is asking foreign currency translation reserve, balance sheet. Is that telling us what the FCTR stands for? It's foreign currency transaction reserve.
Got you. So you're talking about revaluing for is that for consolidation or is that on an individual basis? So I can't see the question.
Yeah, I don't know, Margaret. Maybe you'll tell us a little bit more. Katie's asked what stock capabilities does the system have, but I think we mentioned manufacturing.
That, yeah.
So it's a similar thing. Christopher, you mentioned the ability to manage or eliminate offline spreadsheets. It's common for a company to maintain offline spreadsheets to manage balance sheet accounts like prepaids, accruals, etc. The sheets will contain a summary of the balance broken down by each transaction, vendor amount, description, date, etc. A schedule when those amounts should be released and where they should be recorded. Can this all be done within the system?
Yeah, no, absolutely. And those grid screens I was showing you are fantastic for filtering down to specific journals and running reports based on prepayments being released, deferred income being released, and you can drill down into the original transaction that you related to that journal. So if I'm creating a prepayment and I've related it to a purchase invoice, I can drill down into that original purchase invoice and see that release straight from the system as well.
Okay, and that I think deals with the questions. And anybody, if you want to explore anything further with Account IQ, you want to find out about anything more specific, and please fill in the poll what you'd like to find out more about. And Taylor or one of his colleagues can get in touch with you after the session and go into things in more depth. Okay, I'll just leave that open for a few minutes and see what people say. Brilliant. I thoroughly enjoyed that, Taylor. Taylor, I'll ask you the same question that I asked at the end of the Sage one. Fast close. How quickly are your clients managing to close the books?
Very fast, real time. Like Ashley mentioned before, it's crazy. We speak to some clients that are managing month end, they're kind of 15th of the month and they're still closing out their current month end process. So it really depends on the scale of the business in terms of how much time we can save them. If someone's closing their month end in 2 days already, then obviously you can only save them a couple of days in there. But if someone's taking 15 days, 20 days to close month end, we can reduce that massively. So we've seen 5, 10, 15-day reductions in that month end close.
Brilliant, brilliant. Right. I think Rohit briefly appeared there. I think it's time to hand over.
Thank you very
you
much.
hugely, Andrew. See you in the round table at the end. Over to you, Rohit.
Thank you, Kevin. Once again, thank you everybody for joining and thank you for the opportunity. Let me share my screen. Let me know, Kevin, if you can see my screen when I go into presentation mode.
Yep, we've got you.
Okay, fantastic. Great. So we've looked at a couple of systems that do accounting and finance seem like really, really well. Now we're going to look at, once you have those things in place or something similar, what can you actually do with your data? And this is what I want to cover because I'm going to talk about reporting analytics outside of your standard finance thing that you do with P&Ls and consolidated reports and so on and so forth. So just to give you a perspective, we're talking about data warehousing, where we bring data from a single or multiple sources, combine and transform that into a format one of your BI tools can understand. And that's what I'm going to cover. So obviously, if it's data, if it's transformed in the right way, hopefully it'll help you make right decisions or rather better decisions. But this was a poll run by Harvard Business Review, and you know, make what you want with that $900 billion economy loss in terms of bad decisions. But I personally think the situation is such where more than bad decisions, decisions are being made on inconsistent data or unreliable data, and that's probably over 50%. That is, that is happening as of today. Data is obviously everywhere, so I'm in the space where you've outgrown a system report or reporting within a system, whether it's Intact or Account IQ, you've outgrown the P&Ls, the balance sheet, the cash flow, the standard APAR that comes out of it. And that usually happens as business grows. You have different questions to your data. Reporting, dashboarding, fortunately or unfortunately, is an area that just continuously keeps growing because your request to your data, your understanding to your data, your analysis to your data changes. And that's why you need more. I mean, I'm just giving you an example here, but I've been in this situation before, and I'm sure some of the people on this in this session have probably been there, where you're going through your month-end reporting or your forecasting reporting and budget reporting and annual stuff is going on, and then you have all these spreadsheets moving around where it's, version final or final version 2 or 3 or 6, and then it's no, this is the new final version, look at the title, and so on and so forth. So yeah, definitely been there, especially when reporting is a lot more Excel based, and no matter what people say or do, and I myself am a BI tool, I think it's very hard to take CFOs and finance users outside of Excel. So we are one who's kind of bowed down to Excel, and we have created a connection within Excel for governed data to be there, and I'll talk to you about that in a minute as well. So what are we actually trying to do here, and what we when we ask our customers, and there were people who raised things around stock and manufacturing and stuff like that. Those are the kind of reports we also bring in along with finance. But when we speak to our customers, we've got close to 500 of them. When we speak to our customers, at a very at the executive level, it's actually quite simple in the headspace of what they want to see. They want to see how their sales performing, what are their margins around it, are they delivering it, the service, the product to what is being asked for, and what is the cash? Simple 4 KPIs that they want to track, and unfortunately, it's not so easy because data is in silos. Data is everywhere, and even more so with best of breed systems out there. I think gone are the days where people are thinking of having one system that has anything and everything in there. I mean, there was a period where ERP systems tried to do CRM stuff, and CRM systems tried to do some of ERP stuff, but you can't scale that. You just can't scale that. So data will be in silos. Data will be in silos for a reason, and this is where products like us come in to bring that data into one place where you can report on. So, I mean, this is classic, and there's probably, ERP level, but that's where we sit, and that's where our world is with Microsoft Dynamics or SAP, or be it QuickBooks, Xero, or Intact in this case as well, where we work with people and at a very fundamental level, data warehouses where you have one place where you can trust that this is all my data in one place. And if it follows the, single source of truth principles, then you can trust it and report off it and make decisions or better decisions from it. Lastly, I just want to cover a section where people say, what, if it's so clear as value, then why don't people do it? And I've been in this room as well where I'm hoping something magical happens, and unfortunately it doesn't. Simply because people don't understand the underlying either the value behind it or are just find the whole change from taking data out of ERP, transforming it, and getting it ready for things like Power BI, and we do that all the time as well. Is not an easy task because you need to understand the fundamental table structures that are in the background behind it. Okay, so what is Zap? So Zap is a data warehouse automation tool which takes your data from multiple sources, be it ERP, be it finance, be it stock, be it payroll, be it HR, e-commerce, and brings it all together and then transforms that into a format, a data model, a cube, a data set, call it whatever, which then is available to you in one of the 3 presentation layers or BI layers, as we like to call it. You've got access to that data in Excel as a pivot table. So you can connect and use a pivot table to build reports and do analysis. We provide a data set on Power BI. So for those who are slightly technical on the call, we do tabular data models, which basically means these are semantic Power BI models, which is a complete data set straight off the data, compatible with Power BI. And literally half a day later, you can start building reports on Power BI if that's the place you want to have your reporting. And we also do Zap BI, which is our BI tool. The difference between us and any generalist data warehousing tool is we've taken that technology into the space of ERP and finance systems and accelerated this journey hugely. So as an example, with Sage Intacct or Xero or QuickBooks or Dynamics 365, we've already got a connector. So we pull all data. We pull even custom data, custom fields, user-defined fields, those kind of things. We then transform that into a data set, which is ready to use. And then we allow you to We even give you reports and dashboards, and I'm going to show you some examples of what it is. So to give you an acceleration of what you can do as a starting point with your BI and reporting. But please consider this. It's either your current finance system or a future state of a finance system where our reporting, sure, we can do P&Ls, we can do balance sheet, cash flow, all of that good stuff as well. And a lot of the times in the finance thing, our TB is our starting point because that allows you to start trusting the data because it has to balance. But our value is when you're going beyond that in terms of reporting and business decision making. Okay. So if I come out from here, and I'm just going to move to another screen here. Okay. Just give me 1 second. I'm struggling a little bit here.
While we do that, Rohit, while
Yeah.
you're finding the right screen, there's a poll that we've got here that I could just
Yep.
launch while we're doing this. And
Yeah.
simply saying, what's the biggest blocker that you folk have got to month-end reporting and analytics? Which of the problems that Rohit started to mention are the ones that are affecting you the most?
While I say do that, Kevin, can you see my
I can see
BI
that dashboard
dashboard?
fine now.
Yeah.
Yes, we've
Yeah.
got it. It's brilliant.
Good.
Okay. Give a couple of seconds more. Well, okay, I'm going to close that in 5, 4, 3, 2, 1. Closing the poll. So just share those. I think we've got some interesting results in there.
Yeah, very
And
nice.
it's quite even.
Yeah.
You know, all 4 of those, and well, the 3 are about messy data. And there's messy data, there's lack of automation and tooling, and there's time spent on manual work. What surprised me is that we're actually in good shape, just need more time. That's surprisingly high for me, 22%, which is probably good news.
Mm-hmm. Yeah, exactly. Exactly. Because what this is telling me is there is an appetite already within the cohort we have here that goes beyond just standard P&L reports from a finance system. So that's quite interesting. Right.
Okay. Right. Sorry, carry on, Rohit.
Okay. All right. So I'm going to show you some dashboards and I'm going to give you some perspective around that. But once the data is transformed, I want to explain what more we can do there. So, sure, you can have an AR dashboard and you can have aging around it, but where we start to really shine is if I look at my AR aging. But what this is this is fundamentally a trend. It is a 12-month trend of me snapshotting the data at every month to show you the trend of how your collections have been. So this is like when you want to change your AR processes and see, can I bring this down? Obviously, in my case, this is going really in the wrong direction. I've got too much, over 7 million in one, or over 120 days. And it's been increasing and going in the wrong direction. So what this tells me very quickly is I have a fundamental problem in my process. And if I don't change my process, this is the current state that I've gotten into. So this is slightly tricky in a finance system itself because it is giving you at this point in time information, whereas what I'm giving you is a snapshot of data at every single month so I can plot that 12-month trend for you. So I can literally, and in this case, as an example, I'm going back to 2017. Because I'm a data warehouse, because I hold the data against it, I can go back in time at any point and give you the aging as of that point in time. So as an example, we're sitting today on the 10th of December, but I could easily go back in time and say, as of 30th of November, what was my aging, whether it's AP, whether it's AR, and we are now coming out with inventory aging as well. So historical point in time aging. This helps in month end, but most importantly, it helps in financial audits as well, because that allows you to explain to the auditors how you're following your IFRS or GAAP kind of processes within the businesses. Sure, you run your journals and all of that, and people make mistakes, so you correct it using those journals so you can keep a track on it and follow the right best practices. But generally, what happens is these auditors want to know, as of that point, what was the situation, rather than how you corrected it. Obviously, is important, but what was the situation as well. Okay, so this is where a data warehouse starts to shine. Let me give you some more examples. So this is what we call advanced reporting. When you've gone past the whole bill, give me a TB, give me a P&L, those kind of questions. Okay. So this here is a example of a CFO dashboard. So I've got single company, multi-company as well. We handle financial consolidations as well. You can have dates as a slicer. In this case, it's month and day, but I could easily go into this and go in the direction and say, okay, I want a hierarchy which says year, quarter, month, week, day instead of month and day. And I can, fundamentally review the data. We've got KPIs here, which is telling me clear performance and margins and calculations. But the key part is, these are performance cards. So there is a description here. There is an understanding of what it means for the business. It could be a description of how you're calculating this as well. Talking separately about working capital. Another example of where a data warehouse shines is where one of our clients actually built a working capital analytic dashboard for their business, where they brought in AP, AR, and inventory aging, all three in one place. And by finding efficiencies in each of these, they were able to save over $5 million in their working capital around their inventory. It's a food and bev business. So that's where the analysis goes beyond just a P&L or just a financial statement. Okay.
So Rohit, you said there that this can be a consolidated view, so it could combine 2 or 3 companies together.
Absolutely. Absolutely.
Would that be doing a proper financial consolidation where there might be minority interests and intercompany balances and things like that?
Absolutely. All we need is an understanding which is the transaction that is the intercompany transaction. So either they have intercompany accounts or they use financial dimensions to highlight that it is an intercompany transaction. As long as we have that information, we can do that. I'll actually even give you another example that we're working on today. So we have a client that is on QuickBooks, but these are 3 entities, not one instance of QuickBook with 3 companies, but 3 different entities, 3 different companies where they have 3 separate QuickBooks instances. We are unifying 3 QuickBooks instances into one. That is not possible because you're going 3 different databases and we're combining that. So we have a master mapping sheet because they have different chart of accounts. So they today have 4 data models. One is individual company data model, where based on that chart of accounts, they want to do their analysis and performance and project-based profitability. And then they want to have a reporting chart of account where they can build this for their group for sales and general ledger. Those are the 2 areas. So that's where a data warehouse is suddenly coming, where you basically open up everything. And this could be a core table, custom table, core field, custom field as well. So user-defined fields as well, where you're bringing that information and saying, okay, I want to report on this. I hope that answers your question. Okay, good. Moving on, another example that we do and which has become quite popular with us is this 13-week cash flow. So in this case, I'm actually using AP information and AR information, both the modules coming together in one place. And then I'm bringing other cash investments, which in my case is actually an Excel sheet. This is my plan or my view of this is what I may do later down the year. And I want to see the cash impact on a 13-week view here. And I mean, that's the beauty of BI, it has to tell you what's working right and where it's going wrong. And that's where, colors like red and all those things kind of pop up and it's saying, okay, at this point, week 34, we have a problem. So you need to fix where it's going. And obviously I can go granular as well in a row and column format, or I can drill down into the transaction itself, what makes up this number of information. Okay. So that was the daily executive dashboard that I was talking about. So I wanted to give you a snapshot of that. as well. And lastly, I want to cover Power BI. So as I mentioned, we work with Excel, Power BI, and Zap BI, which is what I was demonstrating for you earlier. So we work with Power BI. We've got 70 clients on Power BI and doing some very clever stuff. And what we've done now is because we produce semantic data models for Power BI, these are tabular data models. This is a Microsoft technical term I'm using because that's what Microsoft accepts now. And Microsoft's become a little clever where if you want Copilot, they want you to be on Fabric. But here's the beauty of Copilot because I'm leveraging Microsoft's investments in Copilot through this. One thing before I do that, I want to show you is this is the data set I'm talking about. This is the semantic model. This is what makes what we are doing hugely powerful. Because if I gave you a measure and a dimension and a data set of your data, and if you know Power BI, you can quickly build reports for yourself. So in this example, we are doing an AR aging report. But where I really enjoy doing this is basically I've started to understand some things about questions about my data. Okay, what was my sales in 2017? And it'll look at the data, and I'm on an AR report. But because I have the data set or the underlying structure of the data, it'll go and look at. I'm on an AR report, by the way. I'm not on a sales report. I'm on an AR report. So it'll go and check that information for me and give me that information. Then I can ask about trends. I can ask about build me a board information pack or a narrative of what I'm going to submit as my management report and management pack. Sorry, sometimes it takes a little bit more time, but this is because it's going to the data and having a conversation. If I would have asked, give me the information about what my top 10 overdue is, it'll quickly go into here and probably show me this account has the most, the most overdue amount right now. So it's given me this information, which is 396. And if I were to go into the sales dashboard, I think it is one of these. It's one of these, so it's here. I could have actually just clicked here. I forgot that. I could have clicked here and it would have gone in here and said, it's here, Rohit, and it's in this information here. That's where it's pulling it from. It also starts to tell me how do I got the data and suggest content for a reporting page as well. Plus, because it's Power BI and connected to Copilot, it tells me how to build a report on Power BI as well. So yeah, just wanted to give you a feel for that. Sorry,
Right, we've got a few questions coming in and we're running out of time. So
yeah, let's do that. Yeah.
I think, well, one, just extending the Power BI thing. Margaret's saying if I pull all my info, CRM, headcount, finance, etc., into Power BI anyway, do I need this tool?
Yes, because when you try and pick your financial information, you need a structure of that data before you even start with Power BI. So you do need our help to build this data model. This is the key part. This data model in something like some of the other tools that you're doing, it may take a lot of time to build this because you are literally going table by table, pipeline by pipeline, relationship by relationship. So if I go into the back end, let me show you an example actually. So if I go into a data model and let me see what I have, I've got Sage. Let me just see Sage 300 as an example for you guys. But essentially, if you look at the data source, and this is just one application, there are thousands and thousands of tables underneath that. So you need to understand the structure and then the metadata behind it and how does it relate to every other table that exists on there. This is a scroller. I'm just showing you a simple example. And how do you transform that? Something that would take you 6 months, 12 months, we do it literally in weeks. If not, sometimes even less than a week if it's one of the ERPs that we support. And I'll just quickly show that up as well whilst you pick me another question.
Shezed is asking, you showed the cash flows example of 13 weeks. Can you extend that sort of thing to yearly?
Oh, absolutely. Absolutely. 13 weeks, 6 months, yearly, absolutely. Not a problem. There is no limit to how detailed you can go or how wide you can go in terms of your time period spectrum.
Okay. Martina is asking, can you connect to Sigma and then compare the Sigma data to e.g. zero data?
I don't know Sigma, but if it's a SQL database or there is an API here, then I would be able to do. But our biggest world is this: Sage, Syspro, SAP, and Dynamics. We also do a lot of QuickBooks, MyOb, and Zero. If these are one of your systems, we can help you very, very quickly. But if not, then I'm looking at the database or the cloud connectors to connect
So
and pull data.
am I right in saying that if you're using Zero at the moment, you can easily use Zap to enhance the reporting and so on you've got out of Zero, but if you then at a later date grow out of Zero for other reasons,
Yep.
then you can still continue to use Zap.
Oh, absolutely. I mean, we've had a lot of instances where people are on Zero or QuickBooks and are using our reporting and BI tool, and then they go into a tool like, say, Intact, and we continue because we support Intact as well. And they have the historical data from Zero, the new data from Intact, and they have a trend and comparative reporting for last year, last 2 years, last 5 years as well.
Brilliant, brilliant. So, Rohit, that has been brilliant. I am just wondering where we're going next. Nathan's there. Brilliant, Nathan. Spot on. Okay,
Thank
we're
you very much,
running
Kevin.
slightly behind schedule, Nathan. Sorry. But yeah, so we've seen numeric and what you can do with databases and data warehouses outside of the ERP system. Numeric. What do you add to this, Nathan?
Yeah, of course. Look, keen to go through that today, point out a few key areas within our product that I think are going to be really pivotal and influential for how, folk on this call can really essentially set their team up for scale and really just kind of empower the wider accounting org to become really strategic business partners to the wider business. So I'm just going to start by sharing my screen. And yeah, we've got a poll up there, which would be on Zap. And yeah,
Realised that I hadn't asked the final poll with Rohit. What else would you like to find out about Zap? If there's anything else, please fill in the poll. My apologies, Nathan. I completely forgot.
no worries at all. No worries at all. And yeah, first and foremost, my name's Nathan. As I mentioned earlier, I head up the EMEA sales and go-to-market team over here at Numeric. But I joined in May to kind of really head up our UK and EMEA operations over here. But I've been working with finance and accounting teams for the best part of 6 years now. And frankly speaking, I think it's probably one of the most exciting times to work in the accounting finance org when we think about businesses like Zap, Intact, Accounts IQ, what David's doing over at Mayday. Like there's such a huge kind of change within the market and a lot of exciting tools coming around. And so I think it's really a pivotal moment as we look at kind of adopting software across the board here. I think what's been really interesting for me over kind of like last 6 years of my career, like I'm basically been having the same conversation with accounting and finance teams during that entire period, that fundamentally the work that is sitting on the shoulders of accounting and finance leaders and the team as a whole is growing exponentially, but actually the headcount and ability to kind of reinvest back into that team is typically flatlining. We work with a lot of businesses that are looking at really kind of purely focusing on growth and revenue being top of mind. And of course, with that complexity, we get more complex revenue streams, reporting needs, intercompany, multi-entity, and typically not a lot of investment to kind of build out that accounting team. This kind of shortage makes it really hard to be able to kind of go and make strategic decisions. And now we're suddenly in a world where AI is everywhere. There is, to be fair, let's be honest, a lot of noise, a lot of hype across the space. But I think we're kind of starting to realize that unless used really cautiously, accurately, and auditably, it's not always moving the needle in terms of speed. And really, as I mentioned, really the accounting finance team should be best poised to become real strategic partners to the business, helping business make better decisions based on that data, based on the close, based on the revenue data that we have in place. But that's typically just not possible due to the recurring cycle of periodic closes, quarter over quarter reporting, annual reporting, audits, downloading information from different systems, pivoting in Excel, managing different cash processes, and posting back into your ERP, it typically really removes the ability for accounting and finance teams to be actually able to work on strategic projects. And look, there's a number of systems across the board, as I mentioned, where it's going from the world of kind of, pen on paper to then Excel, where it's all in documentation. And obviously, there's been a number of systems across the years that really helped automate a lot of that process. But I think what Numeric has really identified is that in order to get to the point where you can build a truly scalable accounting and close process, you really need to take a much more proactive approach to that. And in order to do that, I think what Numeric has really identified is that we need to go and first solve the key underlying data problem that sits within the accounting and finance world, which therefore allows you to kind of start to adopt AI-powered processes, report to a greater level of detail as your business scales, and set your kind of close process up to be a really efficient process on a consistent basis. We work with hundreds of both public and private businesses like Figure and Braze in the public space, all the way down to businesses on Xero and QuickBooks, which are only just kind of starting to go on that real high growth journey. And what we really want to do is build a data first platform that's really going to go beyond the close, really kind of start to take into account more and more of your accounting process, whether it be in the pre-close, identifying transactions, monitoring your cash, during the close, automating that workflow, automating reconciliations, and giving you a lot more in detail reporting and analytics by starting to adopt AI. With all of this sitting on top of your ERP and GL structure to really become a true command module for your accounting workflows. With then the ability to embed AI effectively because it's based on the underlying transactional data layer, which allows you to work really effectively and really scale your accounting and finance team to become true business partners. And now let's just quickly jump into the tool. The way we're really doing that data first approach is by starting with that GL and ERP connection. So to give you a bit of insight, we connect with 4 key GL systems, Xero and QuickBooks, which is probably the most prominent for this group that we see here based on that survey at the start, as well as Sage Intacct, and also NetSuite as well. And what we want to do is connect down to the level where we're not just pulling through your chart accounts or high-level trial balances. We want to go through and pull every single transaction through on a completely ongoing and real-time basis, where we can pull through all your relevant transaction lines, journal entries, vendor bills, etc., but also pull through all the relevant segments that sit within that GL, whether it be numerous tracking categories, projects, vendors, departments, locations, and essentially really start to mirror your GL with a real-time sync into the Numeric platform. Really meaning as soon as a journal has been posted into any of your ERP systems, it can immediately be reflected in the Numeric system that you can therefore use it as a command module to start to create a much more proactive process across the period. And the first kind of step to that, as I mentioned, goes even before we even get that close process. Typically, we hear one of the key bottlenecks as businesses start to scale is just data inaccuracy. You spend the first couple of days of your close, going through transactions, making sure everything's booked correctly, making sure everything is tagged accurately to really ensure that as you start to report up to the wider business, whether that be board investor packs, senior leadership packs, the data is accurate and you can really kind of hold it to account. And therefore also from an audit perspective, know everything is tagged correctly. And this can be a really laborious process for accounting teams, trawling through hundreds, thousands, tens, hundreds of thousands of transactions every single month. There's got to be a better way to do this. So what we're first looking at implementing for teams is a proactive monitoring system, which is really going to alert your team as soon as any anomalies appear on your GL that require attention. Now, this can be as simple as things like large transactions. We typically hear that, hey, any business that has transactions running over $1 million hitting their GL, that probably requires attention and additional sign-off. Prepaid expense policies, ensuring any expenses that hit over your threshold that need accrual. You're notified as soon as they occur, so that work can be done ahead of the close process rather than becoming a bottleneck during the first few days. And things like expenses missing vendors. This is obviously a pretty key part to really ensure that you're able to report on business spend. And so what's important is that by the time you get to the start of your close period, all of your transactions are fully accurate with that tagging to ensure that you can report effectively. So what we want to do is as soon as any of these transaction lines hit any of these monitors, we're going to alert the relevant member of the team that owns that and point them back in the direction of the specific transactions that are causing that monitor to flag. And look, candidly speaking, as I mentioned, when we think about AI, there is a lot of noise in the space and a lot of kind of throwing AI agents at different problems. What we're really looking to take is, I'm just going to go back to another monitor here, actually. Let's go on expenses missing vendors. Is really ensure that any process that is going to be audited and you need to be ensured is running consistently on an ongoing basis. We want to build in a hard-coded rule within the system that you know is going to run consistently on every single transaction over every single period across every single account. And so what we're going to do here for expenses missing vendors is essentially set up a filtering system where if account is equal to 5635 office expenses, but counterparty is empty in this year to date, we want to go through and notify Steph and Tom by email, Slack notification, and then within the numeric system, that there is a transaction that requires attention. Steph and Tom don't have to go through every single transaction to work out what's right, what's wrong. We can just notify them as soon as something requires attention. Further to that, you're also able to interact with the system using an LLM style model. Businesses get really creative in what monitors they build within the system. And it's actually typically what we find most businesses will iterate on within the numeric system, most commonly. We typically would set up sort of 5 to 6 key monitors during the onboarding process. But actually, we typically find within like sort of 5 to 6 months, businesses are tracking sort of 20 to 30 monitors in the system. This was a key finding we heard when we got to the 6-month review with one of our customers, Notion. They already had over 30 monitors set up because the team had baked in these monitors and proactive process so intrinsically into their day-to-day. They just removed all kind of review once we got to the start of the close period. And what this really allows you to do is not only ensure that all your data is kept clean and accurate, it also really means that with it can therefore start to take much more proactive and detailed report or process to your reporting and analytics. And so this is one of the key constraints. I think Kevin, talked about it with obviously QuickBooks and Xero, where you've got different environments for different subsidiaries. Even within like the NetSuite, obviously you've got challenges when it comes to quite hard to navigate and hard to build reports. But because we have all that data at our disposal, we can build really flexible reports within the numeric system. We're able to pivot, slice and dice, group, and adjust your data into any format that's required within the click of a few buttons. So if we jump into our consolidated income statement by department here, first thing we can do, as you can see, any report can be based on a balance sheet or an income statement format. And you can quickly pivot between it being by a prior month, prior quarter, year to date, and also really decide which entities you want to review for this report. This gets really powerful when you have multiple entities running on whether in different Xero systems or within your single ERP system, because you can really group entities together. So if you're a business that operates across the US as well as Europe, you can have all your European entities grouped together in one report, as well as all other entities within a single report. And also quickly pivot from it being a consolidated or by subsidiary report. Really ensuring that any reporting can get down to the level that you're looking at based on your entity structure. From here, we can of course increase the number of periods we want to look at and also filter out any specific data sets based on any tag that sits on your GL structure, whether that be account code, counterparty department, or even things in your line memos. So even if it's not a complete phrase, if you're looking for a specific comment within a line memo, you can then base a filter on that to ensure it's either included or excluded at really a moment's notice. From here, we can then also pivot that to really get the data into the relevant format within just a few clicks of the button. With then the ability to click into any of these numbers and again, be confident of the data that's coming through because it's always going to pull you back to the specific transactions that are hitting that report. Can of course restructure in any manner possible, and also add in additional metrics such as gross profit, gross margin, total operating expenses into these reports to really ensure that you've got all the relevant numbers within your reports in numeric, therefore not needing to export into an Excel-based format, where typically data can become stagnant and require additional manual work as and when things change during the close process. Now, where it gets really powerful is it not only allows you to get your data into a relevant format, but it therefore also allows you to start to analyze the variance on any of these reports. Meaning that when you do start to think about variance analysis, we're not just looking at your income statement. You can also start to look at it on, hey, revenue by product. How do we go assess the variance on that? Software expenses by vendor. How do we ensure that we're tracking the variance across every single vendor on an ongoing basis? But not only that, by selecting it to be recurring within the system, it's then going to create what we call a variance report. And this is where the numeric system really allows you to start adopting AI in the manner where it's really effective, analyzing large data sets and giving you insight into what's going on and the story behind your data. So the view that we see here, I'm sure is relatively familiar for anyone who runs their variance analysis, which will typically either be in something like a ERP system or a Excel-based format. But the key thing here is that the numeric system can fundamentally identify what is sitting in and outside of your material threshold, and therefore loop it back into the relevant close checklist tasks. So the relevant folk are notified to which reports require attention. And as we see through here, we've got all our kind of explanations saved. But the exciting thing here is these are all just initial AI drafts that the system has drafted based on the underlying transaction level data. These are not explanations that anyone has had to go and influence. The system has just immediately spun them off based on the access to all that data we have. Now, of course, that's great. There's a lot of data that sits on our GL, but typically what we find is that the true explanation lives in different systems and also typically in our heads. As I mentioned, the accounting and finance team should be the largest, strategic advisors to the wider business because they're typically the host, owners of most of the data. But because of being held up by manual process, it becomes very hard to do that. So as we open up the drawer here, where we see the closed checklist task on the right, obviously the transaction drawer, where you can see all the relevant transactions within the account. You can immediately analyze the trends and understand the explanations from prior periods of the analysis. Then when we get to the assistant, you can really define exactly what the AI is going to go and take into account to really ensure you feel comfortable with what it's reviewing. You can define what fields it wants to go and review, whether it be class, department, memo, location, how many periods it wants to look at, and of course, prompt the AI in the relevant manner. Meaning that folk can get really creative on what you want to use this AI for. Maybe it's not for actual flux explanation, it's for identifying anomalies, maybe missing accruals or just single level variances. Again, you're not only able to do this on just your month-over-month income statement or balance sheet, you can do this on software expenses by vendor. How do you get an explanation to every single expense, every single revenue product? And even get slightly more creative as well, such as drafting management previews or even writing it up as a poem. What we want to do is I'm just going to click on that there. By clicking the initial generation of the flux, the AI is going to run through every single transaction, all the relevant fields that you've defined it to look at, do the analysis on a month-over-month period, and then run through an initial draft explanation of exactly what is going on within your accounts. And we can see here, obviously, the summaries that's identified that, payroll expenses in the marketing department have increased by 1.62 million, which is 25.6%, which is, of course, the variance we see here and is over the materiality threshold. But of course, we want to add more insight to that, kind of really business understanding as to what's going on. Why has that spend increased? So to that point, we can look at things like prior period explanations, child account explanations, cross-report explanations, but also pull in additional data sets, such as information from a CRM system, a revenue system, a HR system, or in this instance, a payroll system. So we can then compare it. Ooh. Me? I always hate typing in these sorts of environments. But what we've done there is simply added in a headcount data set, where it's then going to go and take the two data sets, compare it, and give you that reasoning here. So we can see that the reason this is increased is because headcount grew by 110, from 110 employees to 115 employees by 4.5%. You can interact with the AI to give it more feedback. It's more nice. Really get the explanations into the level of detail that you're comfortable with, and really use AI to empower the team. The key piece here is that none of this is going to be saved within your close checklist or to be shared with auditors up until the point the team is confident with that. You can continue to give it feedback, iterate with it, the system will learn from responses, but it critically won't learn from your data. We have a zero data retention policy, which allows public businesses to kind of use numeric, and therefore you can be confident adding additional data sets into the system with zero risk of the AI being trained on any of that. From here, though, of course, use that explanation. It's then added to the relevant closed checklist log, where it becomes a free text input. So I can come in and manually make any final adjustments and really ensure the human is kept in the loop with every single stage of this accounting process. From here, I can also interact with the wider team, so I can add comments and also add review notes as well, really ensuring that any action required before the period can be closed is added into the relevant close task, really removing noise from things like Excel documents, Slack, Teams, email, centralizing all of these notes within the system. And of course, this becomes really powerful to not only understand more what's going on behind your data, but typically save a lot of time. Airbyte were able to cut nearly 3 days off their close process just by starting to adopt our AI flux analysis, which we launched back in April of 2024. But what becomes even more powerful is that once we have the explanations on an account-by-account basis, how do we start to give you insights into what's going on over the whole business? You can start to build things like executive summaries for your board-level reporting, ensuring that you can really get to this insight within a couple of snapshots and a click of a button using numeric intelligence. Ensuring that we're not having to spend time redrafting, rechecking work. It's all pulled from that single source of data, which will always kind of be your GL and ERP system. Now, of course, from a reconciliation perspective, not only can we manage your balance sheet reconciliations where we compare to different data sources such as PDFs, manual inputs, workbooks from either a Google Sheets or an Excel-based environment, but we can also now monitor your bank accounts as well, really to ensure that your cash transactions are pulling through into numeric in real time as well. So we can automate a lot of that cash matching process. We just announced this tool alongside our Series B back in November, and it's actually been live with a number of customers, including Brex, DailyPay, Public.com, for the last 5 months. Brex is a great example. They're obviously a fintech payments business, very high transactions. They're now seeing 90% auto matching of their cash transactions to their ERP data with the numeric system. By our ability to set up very customizable, bespoke rules, which can adopt one-to-one, many-to-one, one-to-many style rules, and also then take any additional manual matches and use AI to auto draft new engines to really ensure that on a month-to-month basis, they're seeing consistent improvements in how much that matching is reducing work. With all this then being wrapped up in, of course, our checklist system, where you can not only track every single task by its preparer, submitter, you can add things like dependent task controls to ensure everything is done in the correct order, subtasks to ensure that everything is done within the relevant order. And again, use really numeric as a command module for all of that accounting workflow, commentary and review notes. So when it does come to audit season, all of that is logged in a single system. Starburst is a great example where they were able to submit, complete their audit 3 weeks early following on from the implementation of numeric. And they worked out they saved around 70 hours in terms of that back and forth with auditors. Hey, where's this review note? How did you get to this number? It's all centralized within the numeric system now. With also the ability, because of all of the data sitting in the system, we can then go and identify key bottleneck areas on your close, rooms for improvement. Kevin made a great point, like technology is not going to solve all of this. Sometimes you are going to have to look at your process, maybe different integrations with different systems, whether it's expenses, AP, revenue. But the great thing is because it's all centralized and numeric, having to spend time constantly reviewing and working through that evaluation with your team, the numeric system is going to constantly point you in the direction of how you can iterate and improve your close and accounting process, really to support you to getting down to the fastest close that we can look at. And Kevin, I see you've come off camera. I know we're running short, so I'm more than happy to wrap up now. And yeah.
We've really run out of time. I think we've got some great comments coming through. Anonymous attendee saying numeric is very impressive, especially in trying to tackle variance analysis, which is difficult for Gen AI and dependent on good bottom level forecasting driver information. And I think that's what's really impressed me. And I was thinking numeric was really the answer to the consolidation process and why that shouldn't be the factor that lets you outgrow, say, zero. But the fact that you've then brought everything in and you've got this AI working on the transactions that, it'll do the basic variance stuff, allowing you, the human, to then go on and ask. I always think with a variance, you've got to say, oh, why is that a variance? Okay. And then you've got to ask the why question again and the why question again. Now, we spend so much time, a lot of the time, just answering the first why. We don't get onto the second, third, or fourth one that gives you the real underlying business reason for it.
Yeah.
Yeah.
No, exactly. And I think like what's really powerful about the Flux tool, because I speak to businesses at various levels of stages of growth, and I think, we hear of a lot of businesses where they're trying to do it, but it's taking sort of, 3-4 days a month just to go through that process. Or equally, they're just not doing it to that level of detail that really their investors, maybe their senior leadership is requiring, because it is just too much of a time bottleneck. If we can remove all of that trawling through different data layers, allow AI to do what it's fundamentally very, very good at this point, that analyzing of large data sets, then the accounting and finance team can really add their additional insight and again, become more strategic advisors to the wider business. And yeah, we can certainly help with consolidation, reporting, and obviously cash matching and transaction monitoring. But yeah, the Flux, I think, is a great way of really kind of getting to that next level of insight and storytelling behind the numbers.
Now, Nathan, I know you've got to run, and because we're running a bit late, you might not actually make it to the round table at the end. 12 months' time, what do you think is going to be happening?
I think 2026 is going to be really interesting. You made some great points about some new vendors in the space. And as I mentioned at the start of my presentation, I think for everyone in the room today, it's fundamentally the most exciting time to be in accounting and finance. It feels that it's finally having its moment of high investment and change, where systems that have been around for 20, 30 years are starting to be challenged by new players. We've always heard of sales tools being invested highly in, go-to-market tools. I think you're right. Over the next year, we're going to start to see a few key leaders coming out. I don't think everyone is going to be jumping on it in the next 12 months, because I think we still need to work out who that leader is, because what we first need to evaluate is who's going to be able to kind of deal with the level of complexity that businesses actually need. We think about ERP migrations, transitions. You're only going to do that if it's going to support your business in 10 years' time. And so that's the evaluation you need to make. And I think there's a lot of exciting things that we're working on in numeric that's going to really support businesses in terms of kind of your journal posting automation, starting to look into that, more into the revenue side of reporting as well. And I think our vision of kind of moving towards being a sort of fully integrated financial data platform is going to be hugely exciting for everyone on this call. But I think what's more exciting is what's going on in 5 years, because I think then we're going to see the real seismic change.
Yeah. I don't think Microsoft goes that far into the future. Okay.
Yeah, perfect. Thank you very much, Kevin. Thank you to everyone on the call.
I thoroughly enjoyed that. And David's here, ready to do the fifth and final slot.
Amazing. Thank you so much, Kevin. And yeah, thank you very much, everyone, for taking time. Look, month end should be brief, so I'm going to rattle through this as the closing session. So yeah, just a reminder, my name is David Tucker. I'm the co-founder and CEO here at Mayday, where we are built to mend month end. So we are for in-house finance teams, multi-entity groups, and single entity businesses as well, who are using Xero or QBO as their core accounting system, and are looking to eliminate that spreadsheet-based manual work of month end. So I like to say we're for the M of SMB. And here's where we play. So we're that gap between, you've got your bookkeeping, you've got your third-party transactions, month end ticks over, and you want to get to your management information as quickly as possible. But in your way stands all of that manual work. That might be intercompany workflows like intercompany balance reconciliations, intercompany recharges, might be deferred revenue, prepayments, accruals. So all of those workflows are where we come in by reducing those down to a single click. So let's talk what we do. So first off, on the intercompany side of things, let's talk intercompany balance reconciliation. So this is Mayday. Once you've set up our 30-day free trial, connected your relevant Xero or QBO organization or organizations, and after that, it's like we're one system. We will always have real-time, up-to-date data. You've mapped the intercompany relationships within about a minute of setup. And then when it comes to the intercompany balance recs at month end, we're providing you with the matrix. We're telling you whether the balances agree between your entities. No more needing to check that, no more needing to convert across currencies. We've done that for you. Then the real magic happens when there is a discrepancy, because what have we had to historically do when it comes to our intercompany balance reconciliations? Where there is a discrepancy, we've had to review all of the transactions to identify the one-sided posting that is driving our discrepancy. Well, no more. So underpinning Mayday as a product is what we call AIR, artificially intelligent recognition of accounting adjustments. So in the intercompany balance reconciliation case, doing exactly this, matching up the transactions across the two entities so that I can immediately see the one-sided posting that is the root cause of my discrepancy and fix it accordingly. Because we've all been there as multi-entity finance leaders. We have 1,000 transactions in one entity, 999 in the other, and we end up losing a day manually matching up the 999 in order to find the one. We don't have to do that anymore because Mayday and our product Balancer has done all of that for us. So some really nice functionality to one-click post any FX adjustments required, as well as if there's interest on your intercompany loans, calculate that for you automatically based on the interest rate for one-click posting back into Xero or QBO. Then let's talk intercompany recharges. So I've got costs or revenues in one of my entities, some or all of which relate to one or more other entities in the group. That might be central overheads. That might be, I'm a multi-entity group with a transfer pricing policy in place, and so I'm having to interrogate the transactions in the general ledger, identify those that require recharging, calculate those recharges, and then manually post them in each entity. Now I can set up rules for all of that process, pointing the rule at the relevant transactions in Xero or QBO, telling the rule how those transactions need to be recharged, doing that for all of my different recharge situations, marking up costs if I need to. Might be revenues, might be items posted at the balance sheet, might be set management fees. I create those rules once. I can easily update them for changes over time. Then that means running my recharges is as simple as choosing the period that I want to run them for. I then get this. So this is like a multiplayer sales tax return for my intercompany charges. All of the different transactions pulled through from the accounting system in line with the conditions I've set, the relevant recharge rules applied. I review, much like I would do, reviewing a sales tax return. I've always got the flexibility to override in the event that there's an outlier transaction. Once I'm happy, I jump through, and then I've got all of my different recharges within the group. I choose how I want them posted, and then a one-click post both sides simultaneously back into Xero or QBO. So that big, intimidating manual job as part of month end is now a 5 to 10 minute tick box task. And this scales linearly according to the size of your group. So we've got a 57 entity gym group that we work with, where this took over 2 weeks off their month end close. Then we have cross-entity bank rec. So I've got entities in the group, and there's bank transactions that relate to another entity. Might be intercompany transfers, might be one entity paying a bill, receiving money on behalf of another. Now, all within the Xero bank rec, I've got the Mayday tab, which gives me cross-entity bank rec, the ability to match the bank transaction in one entity to the corresponding transaction in the other, And then when I continue, makes the corresponding posting to the intercompany account. So what we're really doing here is we are enabling Xero and QBO to be multi-entity systems without the cost and the implementation fees of an ERP move. Then let's talk core month-end pain points. So what does deferred revenue and prepayments entail today? Well, it involves me identifying the transaction that requires adjustment, calculating the deferral schedule, and then making the manual journal posting. Now, we do all of that for you. So we will review all of your transactions based on the information. We'll identify the relevant deferred revenue or prepayments treatment that needs to apply. Again, you're always in the driver's seat here to be able to override. You click approve. No more keeping a separate spreadsheet to provide that source of truth of what my deferred revenue or prepayments balance is made up of. We keep that for you. And then you can just one-click post the deferred revenue or prepayments journals back into Xero. So again, just reducing down that manual identification, calculation and posting to a couple of clicks in us. So that's what we do, and really proud. We've been around for 4 years now, 306 reviews on the Xero App Store at a 5.0 star rating. We last month were recognised as Xero's People's Choice Award winner in their new Global App Awards, so #1 from the 1,200 plus apps that integrate with them. So yeah, that's Mayday. That's what we do. And just to dive back into my slides, we do have our Black Friday promotion. Lots of finance teams getting set up with Mayday, so they're on the right foot, heading into 2026. So that promotion runs until the end of next week. And yeah, there's the QR codes there for anyone who either wants to start the 30-day free trial or to book a demo. And the final thing, I just want to draw attention to, so I touched on it earlier. So, we are a core part of being able to scale with Xero or QBO. I mentioned how, we've got the stats of the 650 customers we work with, 46 $100 million plus revenue businesses, another 62 that are $50 to $100 million. The most amazing things can be achieved with a Xero / QBO plus Mayday plus tech stack, for example, an AP solution, an inventory solution, a reporting solution around it. And so that is our CFO tech stack community, which is to spread the word, provide the precedent of exactly what it's possible to do with a Xero or QBO based tech stack. Kevin.
David, I know what we talk about what size company it is that you get to when you get too big for Xero. And I know Sage and Accounts IQ and Aquila, certainly Accounts IQ and Aquila, I've recorded podcasts about this with. I guess your view might be slightly different to theirs, that you can go far bigger than perhaps they would suggest.
Far bigger, far bigger. I mean, our typical customer is a 2 to 10 person in-house finance team. Biggest customer we work with has 33 people in their finance team. We've got customers who have over $1 billion of annual turnover, happily scaling with a Xero plus Mayday based tech stack. So I know we'll come on to it later, but our view is, what in 5 years' time, what does it look like? ERP is still around as a software category, but it's becoming the increasingly rare exception rather than this almost kind of wrongly conceived norm that it has been, because the most incredible things can be achieved with that tech stack, as demonstrated by the fact like 2% of our customers are actually businesses that have moved from ERP systems over to Mayday plus Xero. The business moved from an ERP system, which I won't name out of kind of courtesy, but they 50 entity group. They moved over, say, £50,000 a year in the cost of their finance tech stack. But what's more, when they made that move, they were a finance team of 9. In the subsequent 18 months, 3 of that finance team chose to leave, and the business didn't need to replace any of them because of the superior quality of system and automation that they were able to achieve with us. So they saved another £200,000 a year in the cost of finance team salaries that they didn't need to replace. And this is, this is purely, at its core, this is the benefits of specialization. Xero is a great kind of general ledger. It's a great bookkeeping system. It has a fantastic API. And there are the most incredible best-in-class solutions, of which we're proud to be one for our space of month-end automation that enable you to build the most incredible kind of DIY ERP alternative.
Martina's asking, is Mayday specifically targeted for multi-entity companies, 10 plus?
Absolutely not, Martina. So, we've got the intercompany specific functionality, which will just be relevant for businesses with 2 or more entities. But we've got a huge number of customers who are single entity businesses where we help with the deferred revenue and prepayments functionality. We've got our accruals products kind of in the works right now. Broader month-end close, kind of variance analysis, bad debt provision, business tax estimate kind of coming soon. So any business that is closing month-end with Mayday or Xero that is in that M of SMB category, they're going to benefit from Mayday.
Hey, David, that was absolutely brilliant. And I'm aware that we're getting very near the end. And before everybody disappears off for, well, here in the UK, it's getting very close to tea time. I'm going to ask Ashley, Rohit, and Taylor if you're still there to come back into the room. And guys, I'm going to start. Well, we'll start in the order that we presented. Ashley, it's 2026. Ah, Ashley's gone. Oh, there she is. There she is. Ashley, it's 2026, December 2026, moving into 2027. We're a year to 18 months away from now. What do you think's going to have happened?
Yeah, certainly on the Sage Intacct front, we're moving even more in the direction of artificial intelligence. So we like to joke that we were doing AI before it was cool years and years ago, but even more now, we continue to invest in agentic AI tools in the platform, similar to that close automation tool that we saw to bring you guys those real-time insights, helping eliminate that month-end crunch for your staff and pushing the information you actually care about that you can trust right in front of you.
Brilliant, brilliant. So there's lots more in the pipeline.
Oh yeah, lots more.
Taylor, what do you think?
Yeah, absolutely. I think AI is obviously gonna play a big factor. It's a bit of a buzzword. I think we can all agree AI. I think a lot of the time you see with webinars and with events and stuff, AI is kind of plastered everywhere. But I think from the accounts IQ point of view, what we want to treat AI as is cautious, number one, because I think finance teams naturally are cautious around data and where's the data going and how's it being treated, audit trails, everything like that. So that's definitely the forefront for us. But then secondly to that is actual use cases. So what are finance teams actually struggling with on a day-to-day basis? What's actually manual that we can then use AI agents in the product to then automate? So we talk about a lot about month-end checklists, prompts inside the system, telling you when you should be creating fixed assets or prepayment journals off the back of invoices coming into the system. So I think for us, definitely a practical and cautious approach to AI, but it's definitely the future and it's definitely going to be embedded all the way throughout the product come next year and then into 2027.
Rohit, you're right in the middle of all that data, and we've seen some huge developments already in the last 12 months with Microsoft Fabric and so on coming along.
Yeah.
Where do you think we're going in the next 12 months?
Yeah, absolutely. I think for us, the biggest one is conversational AI with your data. And what will be a report or BI anymore if business users have access to converse with their data through Teams or Copilot or ChatGPT, because we're working with Fabric and Copilot right now. We're working with Teams on our data models with Zap BI. If you're able to do that, what is a report then? So I think that'll be really interesting. I think statutory reports remains. There will be some business reports which you want people to look at on a day-to-day, hourly basis. But I think everything else will move to conversational AI because you're going to do analysis at such a speed moving forward because everything will be on your fingertips. So yeah, I think for me that space was going to be very interesting.
Yeah. Do you think the AI is going to be good enough to really?
Well, it's a really interesting thing, Kevin, because The reality is, because I'm sure everybody today uses AI in some way, shape, or form, and I think things like ChatGPT and Claude and Copilot is creating a wrong expectation where if you don't get a response in 30 seconds and an amazing response, you're like, yeah, the data is a problem. So I think there'll be a realization on the expectation side of things because the answers are only as good as the data you provide to those on to it. So, or the LLM you provide to it. So that is going to be an interesting space. But once that gap or that expectation reality realization is achieved, I think how you converse with data and what actually prompts you use and what is a business report, I think that'll be challenged for sure.
Brilliant. David, what's your perspective?
Yeah, well, I mean, to sort of very briefly repeat the point I just made, I think, at the meta standpoint, scaling with a zero plus QBO plus, zero QBO plus Mayday, and, tech stack around it has become like open-ended, has become like normalized as the default option for finance teams. And then real-time accounting has entered the vocabulary. We live in this bizarre world, like month end, it's just this received kind of, it's accepted point that you can only deliver management information, you can only close after the end of the month, and that's a product of how much manual work there's been there previously. If you had a mid-month board meeting or a funding application, it should be possible to do a mid-month close, and it will be thanks to the work that we're doing.
Ashley, do you see month end disappearing?
Yeah, I do eventually. I don't think it'll happen in 2026. But as we continue to work towards eradicating the close, there will always be activities at month end, right? Like executives are always going to demand reports as of a certain period. We're always going to need to upload AP bills, upload AR bills, do approvals. However, as we continue to work towards that real-time close, we're doing this less at the end of the month and more throughout the month.
Yeah. Taylor, I'll ask you the same question. Do you see month end disappearing?
Yeah, I think similar to what Ashley mentioned, I don't think it will disappear entirely because there's always got to be a cut-off in terms of when you actually want to provide reports of certain information. But I think even right now, you should have the ability to log into the finance system, run a report for a certain period of time and get real-time insights. I think a lot of the time when businesses can't do that is because of lack of automation, because things are stuck at approval workflows because you're manually emailing people for sign-off to pay things or send out invoices to customers. So I think the more and more that the day-to-day gets automated, the less kind of important that month end becomes because everything's there in the system already processed.
Yeah. And I'm certainly saying that. I'm thinking about Grow CFO and dropping into our zero system. And I think, well, what's it looking like this month? And I'm thinking, well, no, that's not right because I know the
You're
accounts
spotting it
team
throughout
hasn't
the month.
these half dozen invoices yet. And but those sorts of things are going to have to disappear. And I think it's going to be that kind of instant thing is what we're going to be looking for. Yeah. Okay. Yeah. So it's all looking very good for the next 12 months. Guys, thank you because you've given us a view of what the future might look like generally, and you've also each given a view of what might be in store from your own product set coming up in the next 12 months. And once again, I'd say thank you, each of you, for super presentation this afternoon. There's clearly been lots of interest because we got lots of good questions coming through all the way. Once again, yeah. And thank you, audience. And I know one or two people have dropped off because we have been going for over 2 hours. It's a long watch, but thank you. I've got one new message coming through here. Two or three people saying thank you very much, George. Thank you, Martina. Thank you. I know Margaret, who asked a lot of questions, had to drop off about 15 minutes ago and is going to watch the last bit on the replay. But yeah, thank you, folks. And once again, if you want to go into this in a lot more depth, there's the innovation report to download. It's a good cure for insomniacs. So yeah, have a good look at it. And thank you once again. And I haven't announced the tech theme for the next quarter here at Grow CFO. We're probably going to be looking at AI agents, standalone things you can put next to your accounting systems that might avoid you doing finance transformation in whatever area of accounting that may be. but more of that coming up after Christmas and into 2026. So once again, thank you, everybody. And I'm going to close the session at that point.
Thank you for the opportunity.
Thanks, Kevin.
Thanks,
Thanks
Thanks,
very much,
everyone.
everyone.
Have a good evening, guys.
Take care.